You still see yields going higher from here, even retesting some of the levels that people have basically said are in the background.
Yeah, and you know what, I'll start with, I think 2023 is going to be an extremely informative year for 2024 yields. And what I mean is, if you look at the low close on 10-year yields, it's roughly 350. If you look at the high close on 10-year yields, it's roughly 5%. We're of the belief that this kind of volatility is going to continue, and we're going to test both the lows, 350, and we think that's a Q1 story, and the highs, 5%, and we think that's a Q2 story. A lot of the drivers for higher rates haven't left the market, right? We still have supply, we still have inflation. I've been in the market since 1994, and I know at any given point in time, the market looks at one thing. So now we're looking at the one thing that gets us to 350, and then it'll revert to the other issues that haven't been solved.
Earl, you have to clarify for me, if we're going to see that type of volatility, that type of movement in U.S. Treasury yields, what does that mean for the plumbing of financial markets? Talk to me about the reserve repo facility, the general account, like what comes next? I mean, how is that going to manage through?
Well, the plumbing is fine. And remember, I said the volatility that we expect for 2024 is the same volatility we had in 2023. Yes, the Fed brought in some additional facilities, but now that the plumbing, the foundation is solid. And this is an interesting thing. We've been tracking volatility in 2022, and we track it in a simple manner. What's the absolute yield move? So bonds are up 1 basis points today, down 2 tomorrow. That's 3. 2022 was the most volatile year in the 2000s. Except for, you know what, 2023 is now going to be the most volatile year, right? An absolute yield move. So there's no reason for that to stop. There's such a dispersion of views out there, incredible views, plausible views, that, you know, it's a tug of war between these. So we think we'll continue to see that. The plumbing is fine, and we'll be good.
And what about demand? I mean, what are your thoughts on the market's ability to absorb all the supply that's expected to come through during the first half of next year?
Well, you know what? That's why we expect us to go back up to 5%. The market ability, here's an interesting stat for you. Since 2007, the amount of treasuries outstanding has increased 5-fold, 5 times. The amount of capital at dealers to support that inventory make markets has increased 2-fold. So what that tells you is you get broader, wider moves for any given piece of data that comes out, which is why we're getting these type of moves right now, which is why we'll probably test 350, and the high likelihood we go back up and test the highs again.